John, before you go, I would like to ask you a couple of questions. Can you come back on? Can you hear me? Doesn't look like it. Yeah, John, can you hear me? John, can you hear me? Sounds like you can't hear. Okay. John, you can't hear me, can you? She's a lady doctor, John. Okay. Can everyone hear me? Can everyone hear me? Okay. Okay, this is good. Okay, no problem, John. Let's go on. Thank you, Martin. Okay, and I'll just mute John because he sometimes, for some reason, can't hear me. It must be the setting up. You can hear me now? John, can you hear me? Okay. Okay, oh, you can hear me. Well, I'd like to ask you a question. What do you think the advantage is as a broker for people being a Profit Hunter Group member? John, what do you think the advantage is for people to be a Profit Hunter Group member from a broker's perspective? Great, thanks, John. Okay, if you can mute yourself, and we'll have a question here. This is our disclaimer and warning, which you may have seen from John. This has been prepared by Ideal Financial Group, of which John Robertson is the principal, managing director and CEO. It is corporate authorised representative of 299753 of Aruda Proprietary Limited, which is AFSL 338674, and myself, Adesh Trading, has provided the Sekar. No, there's no JR, if you can talk to Sekar, there is no problem there with the audio that other people are experiencing. It may be that a bit of chopping and changing. Sometimes there's a bit of lag, etc. So I'll just send you a message there, Sekar. Okay, so now it does not constitute general financial product advice and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should ideally obtain and consider our financial services guide and consider the product disclosure statement, the PDS, issued by and available from i-deal.com.au prior to investing. Minimum conditions minimum, just 1 second, I think there might be a good idea here. Thanks, Tony. I'll actually do something a little bit different. And how is that sound now for you? How is that sound for you now, Tony? Not as good? Has an echo now. Okay, just 1 second. Sorry, it's always a little bit of a, it's good from our end. Set as disable. Okay. Now, how is that, Tony? It's good now. Okay, great. Now, what I'm going to need to do is to change the sound in the recording. What I do for Profit Owner Group members is to keep a record of the sound, and it looks like it's working now. So sound is okay on the recording. Now, we give you no warranty or representation as to the accuracy, reliability, or completeness of the information. To the extent permitted by law, Ideal accepts no responsibility for any errors or misstatements, negligent or otherwise. What we're going to say to you tonight is what I think is happening, what might be happening, and then it's quite echoey, good but no image. Okay, so there's no image going on here. This is curious what's going on. I'll just give you my best. There we go. How's that? Is that better sound? Okay, great. Thanks, Louise. Looking forward to seeing you on next week on Thursday at the Train the Chartist. So, trading derivatives can be risky. Losses can exceed your initial deposit. Trading derivatives trading may not be suitable for everyone. You should fully understand the risks involved. We may be talking about shares. We may be talking about derivatives. Whatever it is, it's risky. Buying a house is risky. Buying a car is risky. You can lose money doing that too. You should always consult a licensed investment advisor before making investment decisions. Past performance is no guarantee of future performance, and there is a risk of loss as well as potential profit. Before making an investing or trading decision based on any methodology, the investor or trader should decide with or without professional advice whether trading meets your investment objectives and suits you psychologically, emotionally, and financially. This is something that is not put on the disclaimers, but I do that. Legally, they don't ask you to do that. I want you to know psychologically, emotionally, as well as financially, do you have enough of that emotional capital, the psychological capital to do trading? And if you don't, then sometimes it's useful to step away until you get that back. And let's have some questions now for you. Now, who here has never been on? Who here has been on been to a David Hunt webinar or seminar before? Who's been to one of those? Let me know. I'd love to know who's here and what you know and what you don't know. And in general, if you've been on some of mine, you may know something about me, and I don't want to bore you with all the details of me if you have to. If you don't have, there's quite a few people who, okay, not many people have been answering, but we see the next poll come on. And who has been here? Who's never been to a David Hunt webinar? About 15% of people. Welcome to everybody who's coming back. I'm glad you enjoy. I see people who have probably been here in webinars for the past 6 years now. I've been doing webinars 6 or 8 years, since 2008. And welcome back, Hassan. Long time since I saw you in 2009. Erica, fantastic. Ching, good to see you. Bob, long-term Profit Owner Group member. Martin from South Australia, good to see you all. Louise, nice to see you all. Thank you for coming along. And we've got 2 J's as well, and a million Tonys. There's a and lots of Roberts as well. So thanks all for coming along. Now, a little bit more about me. Which is probably boring. I consult and advise to Macquarie Group, and this is for individuals in Macquarie Group. The corporations generally don't pay the bills. What the advisors in those corporations do is pay me out of their own money to get my advice, despite the fact that they have millions of analysts or many highly qualified analysts in their own firms. And one at a very large stockbroker has said to me, oh, gee, I wish I can't stand my crappy analyst. And so he uses me as a second opinion to what he's receiving from his own in-house research. So I can be seen as a second opinion for the professionals, and sometimes the first opinion when I've won their trust, which I do. So the people in here, OmniWealth, I'm on an asset allocation committee meeting today, and I've been telling them that we can expect 56.70 in the XJO for a couple of months, and it arrived there today on the SPY, which is the share price index futures, the equivalent of the XJO in futures terms. ANZ, Dornbush Partners. So here's how to interact with these in this webinars, and I'm going to get you to do something for me now, and that is to go to that question box and put in the thing that you find most frustrating in trading. I would really appreciate that. And the reason for that is that we all have issues in the markets. We all have different pressures, and I'd like to know what you see there. What do you struggle with? What keeps you awake at night? I'd really love to know that. What keeps you awake at night in the markets? Or do you sleep soundly? Let me know. Here we go. Robert, buying at the right time and selling at the right time. The good thing about, I'll talk a little bit about that. I find trends are the best thing. You don't have to be at the right time or sell it to get in, or at the right time to get out. I add value to my Profit Hunter Group members to say when to buy and when to sell. For example, for the last month, I've been saying early May, you get out of the banks and you stay away. I'm not going to tell you where it is, but the forecasts, I do that in the forecasts. That's not the purpose of tonight. So we've been ready for a fall in the banks, and I've been ready for a fall in the stock market index itself. Hassam sleeps well. Thank you. That's good to see you. Martin, I can't get it to go my way. If you follow trends, Martin, you will be going its way, and that's the more profitable way. Buying too early on the way down, yes. The good thing about that, Louise, the best thing is you can stop yourself out if it continues to fall, and you can get back in later on at better levels. You might notice when I'm in the Profit Hunter Group, I tend to give them a stop loss, and then if it falls through this level, this is the area we'll next look to. Lorraine, how are you going, Lorraine? When to let go of a stock? Okay, that's to take profits, and also when to jump out. Falling in love with stocks, yes, especially when they're very profitable or somebody's sung a good story, either yourself or others. So falling in love there is somehow you have to simply find a better story, something else with a better story, and at least tell yourself that you could be wrong. So give yourself the story that you could be wrong, and all good things must come to an end. Not taking profit, then watching the market fall like today. Richard, yes, I'll show you what we did yesterday. Yesterday before the, I'll tell you now and I'll show you later. Yesterday before the announcement of the Reserve Bank, I said this market is not right, and you'll see that on my post. And I said, get ready. And what we did was we shelled out 4% of our asset allocations on the self-managed super yesterday, as well as being light on. the trend is your friend to the end. Averaging down is a bad practice. Yes, averaging down is a bad practice unless the only way to average is to get into a good position. If it's making you money and the market pulls back and you're still making money, then you can average in again. I didn't say averaging down. Not following the rules, selling too early and watching the stock run. So we're all pretty guilty of those from time to time, and you're not alone. You've just heard everybody else's bugbears, and let's go. So what's this in it for you? Learn to when to hold, when to fold, judge market strength, and when to pass on. And I think, and I believe now after 33 years of doing this, that I'm pretty well equipped to help people who are ready to be helped. So if you're ready to be helped, I can help you. I don't say those statements unlikely. You might not know me. You might have no idea who I am. You will notice I'm probably a little bit not as... I look a little bit more worried half the time on the TV. I enjoy being on the TV, but I look a little bit worried. I also have a nice thing which I do, which I find really, really nice to do, and I've just started doing that more recently, is to do the training sessions in person that we are doing now, but I do them over the weekend. And Jim, you were on there last time. You were in Perth, and really, that was really nice to see. It was really nice to see, to meet you there. There was quite a lot of people from Perth. I really enjoyed being there. It was a truly nice experience, and I'm going to be doing a few more of those, I think, a bit later on. I've just had a request from a fund manager to train their staff in markets and technical analysis, because they just keep on getting told by fundamentalists what should happen, and they're using me as a second opinion about what should happen in the markets, which is flattering. Okay, so let's get moving. I have another question for you as well before we get into the meat of the biscuit, and my question for you is, somehow I'm missing the real thing that I want. I'd like to know is if you are a trader, an investor, or a mix. And hopefully you can see this up on the screen. If you can't, just let me know. It looks like I already closed it by mistake. It doesn't give me a reopen option on that one. But just let me know whether you're a trader, an investor, or both. And that would be handy for that. So yeah, a mix. There's a lot of people who are mixers. And I think that's the best way of being, because an investor can sit there for a long time, and an investor benefits from the really big moves, and that's obvious. But a trader can actually take some profit, bank some cash, and then if the market falls back and their investments don't do so well because the market gets over toppy, then they don't feel so bad. So a mix, I think, is a good thing. There's no good or bad in this. If you're trading, you're looking for income. And if you're investing, you're looking for capital growth. That's really the difference between the two. So, have you ever felt like a deer frozen in the lights, in the headlights, like a kangaroo? I remember running over a kangaroo. I'll tell you about my experience being a deer in the headlights. Basically, I was working for a semi-government body called OSAT. It was it became the nucleus for what is now Optus. And it had substantial currencies exposures and also interest rate exposures in bank bills and euro dollars from its borrowings. And the currencies were in Japanese yen and US dollars. And during the course of that, in 1985, when I got my job as Deputy Treasurer, I learned how to do technical analysis. Prior to that, I'd been involved with currencies and interest rates and money market from 1982 and the year that the Australian dollar floated. So what happened was I developed an ability to hedge currencies and unhedge them, the exposures for buying the satellites from Hughes Corporation, the rocket launches from Ariane Space and also NASA, and using movements in the market, I generated a benefit. And that benefit, I'll tell you what that benefit was later for the company. And in 6 months, I'd lost $10 million after making very good money. Now, $10 million, it took 6 months to burn and churn. And I shouldn't really be telling you this. People say in marketing, but this is what has happened. I was a deer in the frozen headlights, and I can tell you that I used to get a phone call almost every night out of New York time zone, New York lunchtime, and I used to get phone calls saying you've been stopped out in New York lunchtime. The Reserve Bank went after the way that I was trading, and in 6 months lost $10 million. I can teach you how to do that. If you'd like to know how to do that, I can teach you that very easily. Now, what I found out later, Peter, I trade myself. I also give advice. How much of a millionaire are you because of your own account? Well, let's just say that my ex-wife's lawyers were happy to collect $500,000 worth of legal fees out of the divorce case. And my wife ended up not having to work again ever. But my ex-wife, in terms of mine, I can tell you I was severely damaged in over the last 6 years. It settled last year. It was a very vicious, nasty. If you ever hear me talking about lawyers, you'll find out that I just don't understand why they are there, especially when I offered a generous offer. She thought she should have 110% of everything that I ever earned. She ended up getting a lot of it, and the lawyers ended up getting a lot. So that's just me. You asked the question, Peter. So I do trade. So let's go, and I also invest as well. And I suspect I'm, Terry says, after several years of losing, the best divorce payment I can make is $2.50. I like that. Okay, so Deputy Treasurer Forex Manager Qantas and proprietary trader Macquarie Bank. So I get to trade the bank's money, and that was a lot of fun. I tell you that. That was really, really good. Now, now, did I tell you that up here in 2.5 years, I actually made $55 million? So I don't remember the lessons that I had making those big trends, made by big trades in trends. What I do remember is losing the $10 million and the lessons learned in those. And when I come to advising people, as John says, I'm very good at getting out before things go bad. And what I do is for the Profit Hunter, what I do for the Profit Hunter group is to give them the ability to get out before things go bad in most cases. I'm not saying all cases. We limit losses. We get out. I tend to go, okay, let's get out. We'll talk about that later. I've been a fund manager, managing $4.5 billion in bond portfolio manager. and also managing the equities overlay. I was hedging the SPY on that. From this fund manager, I was actually fired. You might put a few knocks in my belt for that, so this goes bad. I was fired for making them money. The exact words were, David, are you all still on the survey? Yeah, probably. I might have to just kill that. It's it doesn't. Okay. Is the survey gone? Sorry about that. Now, what I was doing is that I was actually doing the opposite. They said, I'm sorry, David, we're going to have to let you go. You're actually making money, but you're doing the opposite of what we want you to do. That was what the fund manager says. So as a young man, well, I don't know how old I was then, but old man thought I was doing, young man, old man, I thought I was doing the right thing by doing that. Apparently it wasn't the way that they wanted to do that. They wanted to do a different way that suited them. Now, I don't know what that comes to be and how you do that. I thought the purpose of being a fund manager was to make money for the customers, but I learned from that. Okay, so do I have your permission to talk about Profit Hunter Group? If so, I will talk a little bit about it. And just a few hands raising up, number of hands raising up. Now, this episode has been brought to you by the letter T, and that is time. Now, we're talking about the ASX healthcare stocks now. So here's the thing that I said yesterday, and you can see, generally you can see here, I've been saying targeting 56.60, 56.70 for quite a number of weeks, in fact months, on the downside for the SPY. And this is a post from one of my Profit Hunter Group members, Gary, Northern Beaches, and he said the SPY's hit 56.60, well forecasted. Does that qualify? If so, where to from here on a short? Okay, so you might want to see the answer there. Here's another one. Yesterday I could see that Woolworths was headbutting the target area that I gave. I'd been giving $30 on this rally, and I said today the $30, it just missed at $29.96. The get out of jail card for suffering holders. But if you want to hold on and see if it can rally, run a stop at $29.22. The end result here was Woolworths, today, absolutely getting smashed. Here's Woolworths. This is where I said yesterday it was actually trading $29.74, and you can see Woolworths getting killed down here. So up here I was warning people to get out and get their profits, or at least get out unscathed. Today we've got other targets lower for Woolies. So here's another one which I posted yesterday at 1:30. See this sign here, May 5th, 1:30. And I said, I have seen this pattern before in the 1980s and 1990s. No buying of equities with high market beta. The rally today was punished. A breakdown would signal a fast move down. Now, what I did was I turned around and I said to the PHG members, okay, this is time that we now get in and we reduce our equity exposures. This is what I do for the profit hunters, and I wasn't going to talk too much about that. So what happened today? It got punished, and it's now hovering down close to the target area that I gave. So I've been talking about Westpac. I've been telling the banks have been bad. So over the past 2 months, I've been warning the banks to be a problem after early May. And I also have been saying that the healthcare index was a worry. Can anyone tell me why I would have thought the healthcare index was a worry? US dollar down, AUD risings, yes. Overbought, overloved, plus timing. People are getting better. Overlove plus US dollar. Yes, the Aussie dollar, we've been looking for reasons to buy on the upside. It was overbought, it was overloved, and it's been so strong for a long time. So the main thing for me was both the banks and the healthcare index was timing. Most have and Gary quite correctly has talked about the next section that we're going to do, which is said most have done 5 ways up and now down leg, right? So let's get moving on this one. The time analysis of the healthcare stocks. Is that something we can handle? Yes. Now, this is what the healthcare index likes to do. Now, it has had an incredibly good trend over the last 5 years, really. It likes to have a bottom in July, generally, and then start up. So hopefully I can show you all of this. Gary, good to see you on. We probably have dinner with Louise and you, Gary, after on the Thursday night, after the Train the Chartist seminar in the Gold Coast. That's something would just probably be best to organise. I haven't spoken with you, but I think you're staying over, so that would be best for the dinner. Okay, so what we can see here is this little movement up, and that was different Gary, but Gary H, not Gary R. We can see that it starts up and it gets a good movement up and generally tops out in April, and it may go a little bit further as it did here, has a rest for a month or so, makes a bit of a bottom, and then it really didn't do anything for a while. It has a July bottom. Notice this is all a little bit fuzzy, so you have to use some technical analysis to work out whether it's going well. July over here, the bottom, this was where it actually bottomed and started up again and then started throwing the right patterns. So what we are talking about is time, pattern, and trend. Time, pattern, and trend that help us work out whether the market's topping or not. Now here, same difference. We're in that time zone of April. It usually starts the weakest point of the year and heads down into July. Notice there's also a little bit of a time where they get a little bit of an opportunity for a dip in May in CSL. We're going to talk about that soon. So the way I set up my strategies is important in terms of time because there are certain tendencies that work during the year. So write this down. Timing is important, but not as important as working out how to get into the market and how to get out. Yeah, Gary's staying over that night. He's from Adelaide. I appreciate that. I was amazed when you said I'm coming all the way from Adelaide. Louise is coming from Townsville. So, Gary, it's cool. It's going to be a good day. Quite a few bookings too. So, and I got good feedback from Perth on that one too. Anyway, so the healthcare index, it was up here. The pattern was also starting to worry me. Here's AWC, and this is from Gary, who was on. He says, congratulations on hitting AWC of $1.74 target. I've been giving it, I think, for about a month there on AWC, $1.74 to $1.78. Closed to $1.76 on a very difficult day as it was a standout. Question is, stop now and where to? Okay, so it was Gary from Northern Beaches on today. Let's have a look at where, we have got it, which is coming up. That was the movement. It's been a nice, and as you can see, Illumina has been good. So here's CSL. Let's look at the timing of CSL's behaviour. It likes to top March through April. These are yellow bars. It likes to bottom November period, November period. Notice it kicks up again. Now, we know that CSL is a big part of the healthcare stock. Notice there's also a little cheeky low that comes in over in February. Tendency to keep a low in February and then drift down. We're in that phase of the markdown in CSL. Yes, it has been having a good trend. When you get moves like this, that's not bad. That's not bad at all, is it, really? This does nothing for the bears. This sideways movement is a long distribution, and we could be looking for lower prices on that. So is it a big target on the downside? Well, we might talk about that later. It has had such fantastic trend consistency. If we see a higher Australian dollar, then this will be a worry. But what I did notice is every fund manager that I heard talking on the television or in person was telling you how well they'd been doing based on the healthcare index. And so what I wanted to do tonight, and this is actually at the behest of one of our PHG members who I call the Brains Trust, Dan from Toowoomba, who is coming down on next Thursday, May 14, to the Gold Coast. He said, why don't you do something on the healthcare stock index? So P is for pattern, and it's brought to you by the letter P. And this is the pattern analysis of the healthcare stocks. And I've been doing Elliott Wave for quite some time, and I want to teach you a little bit about tenets of Elliott Wave. Here's some healthcare stocks that may be a bargain, and we're going to go through them now live and see if they are. One is ALT, which is, forgive me, I never remember the code, AZV, and CIR, which is circadian, if I know correctly. So the first thing I want to do, is just have a quick squeeze what it is like on the monthly chart and how it trades. And the answer for this on circadian is I wouldn't touch it with a barge pole because it's just too illiquid. It's certainly gotten way more illiquid and changed its personality around this time. And I don't know what it did, but it doesn't look like it's that good. So I want to run a filter to say, does this make sense? And the answer is it doesn't make sense. So I chuck it out with the bath water. It's supposed to be an ethical investment in healthcare. One of the things, and I went through a list of a fund manager that is an ethical fund manager, and it had primary healthcare. And if you've ever dealt with primary healthcare in terms of the medical side, you will know that they are definitely not ethical in the way they do things. They make big promises, they tie the doctors up, and then they stick them with lawyers' writs when they can't or don't do the right thing, either through ill health as they get older, but they stick them to contracts. So that's just, I arc up about stuff like that. So you may know, I don't understand why the world's not protesting about a lot of things at the moment, but ASV. What's the code? Sorry. AZV. So that quickly wipes circadian off the list unless it starts to get sponsorship. Now, we can see Azure Healthcare, and we look quickly, it certainly had a nice rally, and quickly looking at pattern, I can see that pattern-wise, it's probably not yet complete, and we'll talk about that in a little while. So on the downside, it's probably not yet complete for another move down. Why do I say that? A few little reasons. Let's look at ALT, and you'll get to know these a little bit later with the pattern analysis that I do. ALT, this has become a bargain. It's nice down around support, but it certainly doesn't have a fantastic trend. It is trending to the downside. So what I do is I do some trend analysis, and I'll go and have a look at wherever we are. I'll look at the ADX, and I'll see that the ADX is falling on the weeklies. Its lack of trend, the trend is down. It's trending down on the weeklies, and so I'd be leaving off on ALT. So in terms of bargain hunts, AZV probably has the best shape. Here's some basic tenets of Elliott wave, and I use this and think of this in terms of the patterns. Each and every wave is part of a larger wave set. So what that means is, to get clear about what's going on, we can look, and if we're confused inside a daily chart, we can look at what the weekly chart is doing, and we can look at what the hourly chart is doing to give us an idea of what should be, how we should set our course. It gives us tips. Hard and fast moves are impulsive waves or trends, and a wave tends to start when the nature of buying and selling changes. One side gets stronger. And this is a classical Elliott wave, and I'm going to run through it because about 15% of you are new. If you have any questions, feel free to ask me. I do have full recordings of previous Elliott wave webinars before available to you. Just email me and I'll show them. Wave one is a starting movement, which just starts out and gets a movement up, and eventually we get a correction down in what we don't know whether it's another continuation wave. We know that this has started off and market's gone up, and then it's pulling back and it's coming back down for a wave two. At this point, we would call this an ABC pattern. And this ABC pattern is confirmed when it breaks back through this point here, which is the bottom of wave A and the start of wave B. So, what other useful things can we find out about the market here? The wave two here is usually a 61.8% retracement. And what that means is a 61.8% retracement is on average. And on average, I'm going to bring this over here. If I can bring this, okay, I think I can. Okay. There's something I've just got to grab. I just want to grab a better, I've got a better one of these. I don't want to show you this because it's missing the graphics, which is a bit annoying. There's a nice little picture, then it comes up a little bit more friendly. Okay, got it. Apologies for the delay. I just want to, it doesn't give me access. Booger. Okay, let's persevere with this one. So this one is a retracement which comes down on an average of 61.8% retracement. And what it is it usually is, most people are very bearish at the bottom of this, and a technical analyst or an Elliott wave person will try and buy this bottom, and it has about a 40% chance of working. And what happens is this break up, if this breaks up and reverses, because everyone's been so bearish, that the market moves up strongly. And so we get a couple of buying points. We get a buying point on the average around the 61.8%, or if it gets, if it breaks back up a little bit from there, or if it breaks back through the bottom of wave A, that's the point at which we want to buy at, or the top of wave B, or the top of wave 1, where most of the economists, the fundamentalists, start to think that the market's going up. Wave 3 is the most exciting. This is why you look for wave 2s, because wave 3 precedes wave 2. Now what that means is wave 3 is the most powerful move, and if you don't get in quickly to wave 3, it washes you away. So with our breakup, we see wave 3 is the powerful move. At the top here, everyone's having a party. There are plenty of people willing to teach you how to trade because they've just made millions of dollars in the market. And then at that top, you'll see the newspapers running articles on how good trading is and how you can do it for a living. And eventually everybody becomes a day trader up here, and then the market tops. And then it comes back into what's called wave 4, which has an A, B, C, D, E pattern, and often unfolds in a triangle, which is nice to draw in and quite charming to watch. And it will break out into a wave 5, probably 7 times out of 10. That will work. This will work 4 times out of 10, trying to pick the bottom of wave 2, but the breakout of wave 4 will work out 7 times out of 10. It doesn't give you the possibility of making as much money in wave 5. The nice thing about wave 5s is that wave 5 and wave 1 should be equal. So if you know the length of wave 1, you generally will be targeting wave 1 from the end of wave 4, and it should make a new high, or it should at least make wave 3 close to wave 3. So that's there. Now, so what that gives us is it gives us some big price levels. Now, what I want to do is I want to have a look at the big price levels on AZV. And I ran a bit of a wave count before in my own mind about what AZV is doing. Now we can see AZV, and I just pulled it up because it just appeared, right? AZV has been doing all of the Fibonacci work that we appreciate and love. Notice the decline from here was 61.8% retracement. So we could call this, on a lower time frame, wave 2. Notice that it rallied back up here in a 61.8% retracement. We could call that maybe a wave A. We don't know what this pattern really is. Notice over here we see some triangles, the little triangle in this pattern, and it gets a bit more clearer when you break it down into a line chart. So AZV, Azure Health, is in a jumble sale based on most people's chart pattern thinking. I think out of the 3 that we just saw, it is the best opportunity for a buy that I have seen. If it was to go and play more Fibonacci ping pong, it would go down to 27 cents. Let's just see when we increase the bar chart to see where it went to. So it went up to here, 61.8. Down here would be 27 cents. So if it got into this area, maybe just as low as 24 cents, this is the area I'd be looking to buy in at, because it's repeated those retracements. And the next time it gets down there, the smarties will buy it at 27 cents and they'll get stopped out. So you want to try down at 24 cents before it starts going higher. Now, is everyone following me there? That's a nice thing. We're looking for 27 cents. It might slug down to 24 cents. At the moment, it is still in a pattern. Notice this, A, B, C, A, B, C. It's doing 3 sets of waves. If it comes down into this zone here, I think it'll be a reasonable buy, or on a break above 33 cents, because it will have some legs, and a stop loss needs to be below about 22 cents stop close only. So there is an elegant geometry in this stock. I know I'm probably going a little bit far, but I just felt like doing that. So let's look down onto the daily charts. We can see also this suffers from a distinct lack of liquidity, but in chart pattern, it's probably worthwhile having a dig. especially on a break above 34 cents on the daily time frame. Let's drop down and look at what the wave count is for Azure, and this is from the machine. What I do is sometimes I want to make sure that I'm not telling myself fanciful stories because I've been eating the wrong sort of mushrooms and hallucinating things. So let's have a look at the wave count. Notice here it thought that that was a wave 4 on the decline. That is different to what I thought. Notice also here, it's having a bit of trouble, but notice here it says A, B, C. So it's believing that it might come back down to about 20 cents or 22 cents or 25 cents, which lines a little bit up with the zone that I've been talking about. And notice here that the C wave has 1, 2, 3, 4, 5 wave on the count. So that is the sort of pattern analysis that I'm trying. Now, this is an unusual stock. It's not the most liquid stock, so it's subject to wild erratic movement. So sometimes you have to blur your eyes and think of reasonableness for a while. So Azure, I think of those ones is one of the hotter looks, and you can see that in a falling market, it's just had a couple of days up. So I think it's one either a buy on the breakout or a buy on the dip. Does anyone own any Azure? Raise your hands if you do. And I don't think that's terrible stock if it shows some strength and if it gets into the right zone. So for me, I'm always looking as where can I buy it? Where is my stop loss? Write this down. Where can I buy it and have a reasonable stop loss? Where can I enter if it doesn't get to my area that I want to buy at? And where would my less unappealing stop loss be if it does break out? Okay, so that's yeah, Terry. No, but I have EEH strong now. I'm out. Had EEH going strong. Okay, EEHE. We might have a look at that later. Do you want to put that down as a question inside the box? That's been a good mover. You haven't asked me about that, Gary. Normally you ask me about those sort of stocks, but I guess you do that when you're worried about something. This one's you're not too worried. So that is Estia Health Group. Okay, let's just have a squeeze on the monthlies. Ooh, yeah, there's a lot of little stocks that look like this. There will be some tears after this happens. Yeah, there'll be some tears. Okay, so that gives me my pattern and gives me an ability to work out some price levels. Let's use your example there of Estia. And looking at Estia, I would think that you would see, okay, you might see around about $9.50 on Estia at some stage. There will be some tears later on, but at the moment you might see some $9.50. Now, what we can see here is increasing volume. There'll be tears below $5.80. Now, let's not get onto to everything, but notice this is a strong, powerful move. So we might see, we go wave, okay, this is wave 1, 2, 3, 4. Is this 5 of this set? Let's drop down into the dailies again to see, and forgive me because the machine just does some funny things. Good volume, got overexcited today, and pulling back down into somewhere between $6.25 and $6.39 would be a buy with a stop loss below $6.15, because we can use the same analysis. Wave 1, 2, 3, a fourth, that would be we're looking to buy predominantly around about $6.39, around the 38.2% retracement. And from there, you could be looking at, from this leg, so that was leg 540 to 617, about 70 cents. You might be looking somewhere up around about $7.10 as a target. Okay, so let's move on. I wanted to give you the big price levels. Now, a little bit about how there's quite a number of Profit Hunter Group members who come to the free webinars because they learn a lot, and they also get to see what I'm saying. It's really, I'm always interested in the difference between a Profit Hunter Group member and a non-Profit Hunter Group member. And I often find that Profit Hunter Group members will do incredible things to come in contact and to listen to me. And this is a free webinar for everybody. And Profit Hunter Group members pay to get my advice. And I'm always amazed. It's fantastic. But we do it for ASX shares, commodities, Forex, world stock markets. And gold members pay $7,500. They include professional traders, stockbrokers, self-managed super funds, financial planners. They get to attend what I call speed webinars. Speed webinars are live trading, basically, come down to the wire where I issue buy and sell signals. People ask me questions about the stocks they're interested in. I cover, and currencies they're interested in. I cover about 15 currencies. I cover about 35 commodities. I cover probably about 30 stocks in a day, Australian shares in a day. So the speed webinars are for people who are trading professionally, actively managing their self-managed super funds. They get to watch all the recordings, and this is being recorded so you can see that. They read all speed webinar transcripts, attend forecast webinars, attend trading webinars, 24/7, can ask me questions. They ask me, do I ever sleep? I do answer questions at night. Often if they pop up or early in the morning, I go to bed normally about 11 and get up about 6 or so. They can read my answers to other people's questions on the side. Silver members, they are trading advisors, self-managed super funds, planners, and bronze members tend to be investors, self-managed super funds, owners, and financial planners. So silver members may be busy advisors, busy traders who have other jobs but are trading at the same time, and they want to be able to get my information, and we'll talk about all of those later. So bronze members tend to be investors and have a longer term outlook. So here's some questions with notice, and we'll do the second one first with your permission. And this is PRY, primary, and I think Gordon, I hope you're on here. Known Gordon for many years, and maybe he's availing himself of the recording. So these are, I tend to base on the weekly charts. This is primary healthcare. Now primary, we can see quite clearly a target at $7.06. Sorry, need to go. See you tomorrow at Gold Coast. It's not tomorrow, it's on the 14th. Jay, I'll see you on the Gold Coast on the 14th. I'm still in Sydney, so it's next week. Tomorrow is the 7th. Okay, so just to remember that. So you can be early for the next one. What we're seeing here is primary. Primary in terms of pattern has some good volume. Target is $5.66 or $7. It's going to be good to meet you. We've been talking a bit for a while. $7.06 to $6.97 is the best primary target that we can have on primary. It's a big target simply because this is probably the fourth wave of higher degree. Now, Adrian is saying Primary is one of the top shorted stocks. And for good reason, because they used to screw their doctors like you wouldn't believe. They give them $1 million to go over to them and then force them to work 40 hours a week. And if you know what it's like to be a doctor, having people complain to you, have psychological meltdowns, see you as a god. I wouldn't be a doctor for anything, a really horrible job. And you often wonder why they seem such strange people, because they're dealing with people's problems all the time. Anyway, what we see here is $5.66 on the top side, and as a medium-term target, we see good volume going into it, so that's possibly the short squeeze. Yes, I know. That's how I know. It's hard work and emotionally draining, and it really is hard. It really is hard. And Erica does. I think you do it the right way, not doing it so much, Erica. As I tends to like to work a bit too much and burn herself out, so she gets a bit emotional about stuff after people dying, telling them you have cancer, you're going to die, then you have to switch your emotions. Yes, you're having a baby. Oh, you're dying. Guess what? Your child has leukemia. Oh, you've had a beautiful child. Oh, fantastic. I couldn't do that. That switching of emotions all the time. Very difficult. Now, this is really what happens, Adrian. It's sadly not funny. Now, what we see here is a pattern. And I'm going to show you what I think the pattern is now, but I've told you it's a fourth wave. I think it's a fourth wave. So where would you want to short Primary? I think it's probably got some good legs in it for $7.06 to $6.97. Now, I haven't taken questions. I'm still going through the questions with notice. So if we can hold off questions, that would be great. Notice here the volume on the way down last month didn't have much volume. And so here's what I think. It has not broken up well, but not broken down. A breakdown above $5.70 sees $7.06. But I'm suspecting it's really mutton dressed as lamb. The stop should be at $4.82 if you were going long. It has merit in the long term to that target area at $7.06. This is where I would be looking to short Primary healthcare. It's got some reasonable strength as long as it holds above $4.82, and the trend is somewhat good on these time frames. Let's look at the time. And so I've done these a little bit backwards, and you'll notice here that it likes to have a low around March, and then go up into Christmas in January. Notice we're here, low around March. It's pulling back a little bit. We're in that phase. And so it is something to keep an eye on for a better break up to that target area. And what it does do is it likes to have its low in August and really start up. This is August. It likes to pick it up August area, has its rally. This dip is October, November, and then it goes up. So watch for those little better buying after August usually, and better buying if it continues, better buying if you're getting a zone just before Christmas and a rally into December. Why that is, don't ask me, but that's been its pattern previously. So Primary. Now, when we look at the pattern in Elliott wave terms, we have a wave 1, 2, wave 1 down, and I'll draw this in. Is it better for you when I draw it in? Wave 1, wave 2. Notice that the wave 2 didn't get into the moving averages, didn't get through that. This is on the monthly chart. We have here a wave 4, a 3 on the downside. Then we rally up into wave 4 and then down into wave 5. This is where the tricky bit gets. So notice here in wave 3, if you sold it, it didn't look back. That's what you want to do, is to get on one of those moves and just hold on to that. Now, CDA is not a stock that is, we've been long on a PHG trade for CDA. And it took us a while to get into it, but it has been, we got it down, where did we get it? We got it in here on this decline because it was lining up well. Notice here we've got 1, 2, 3, a little fourth in there possibly, a bigger fourth coming in now, but it's gone off to the races, and all we've been doing is moving our stop loss up there. So we're in the 95, 96 cent area, and a stop is now at, I think, $1 in the midpoint here at $1.14. So that's the sort of pattern that we're trying to look for. We're lucky we got on this movement, which is an ABC. We then could have bought more on a breakout on wave 2. So these are the patterns that I'm trying to see and evolve all day. Now, what we see here now on primary is an ABC, I believe, with a target around the $7.06. Now, if that's due to a short squeeze, as Adrian is saying, as one of the top shorted stocks, so be it. But I can see here that this is corrective in nature, should come back into the similar area of fourth wave, or the other fourth wave. So we get an ABC correction in primary. Now, I also know what the new management of primary is like. And I can say without a category of doubt, they have almost the same level of ethics as the prior one. So we talked about how Profit Hunter Group works. And yes, I know Adrian. I used to work with him, and that's where I get that. So gold members is $7,500. Silver members get everything that the gold members ask of and get recorded and delivered within short time after the gold members were there. How do you mean you can't believe that? What do you mean by that, Adrian? So, yeah, I can't believe he's CEO. It's unreal. After what he screwed up at Qantas, and him and Dixon, how they ruined Qantas. Most of the problems with Qantas came from those guys and James Stroll. You know that. And Qantas had issues, but they compounded it. Really horrible. Anyway, so silver members, they get to watch all the recordings, watch the answers to my gold members on the site. So what I do is I answer questions that the gold members ask, so they get access to me. I generally answer within at least, sometimes within 2 minutes, sometimes within an hour of them, and whatever stock they're interested in. They get to attend the training webinars, they get to attend the forecasting webinars, they get to read all the transcripts and watch the recorded speed webinars. The recorded speed webinars are available just after the webinar finishes. So they're pretty well up there. Okay, so let's move on. Now let's do a live one, and CAJ. Now CAJ was Capital Health, and it was a PHG trade. Ooh, it would have been around about here. We had a fantastic move on it. It was in this time, and it's been a very good mover. It's had good trend consistency. It's not an old stock by any stretch of the imagination, having 8 years worth of data on it. It's been a long time doing nothing, and you might notice here that you might say this is wave 1, this is a long wave 2, with a 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, finishes first lot of wave 3, 1, 2. When you count this, it becomes unusual. We're going to go and phone a friend. At the moment, what I would say is the best thing about this you could expect is up to around about $1 to get out of jail before a decline down to 79 cents or 69 cents. It's had a knock on the head with a lot of volume. Stocks don't generally get good after that for a while. They need to have a settle down, a bit of bit of a Bex and a lie down after that. So CAJ, and we'll pick it up and we'll see what the machine thinks. And I like it in the long run, but I think it needs a pullback in the short run. Thanks, John. Good to see you. And notice here it says, okay, it's saying wave 1, wave 2, 1, 2, 3, 4, 5. When you see letters, that's a correction. When you see numbers, that's an impulsive move. This move down says, basically, in my interpretation, ABC. 1, 2, 1, 2, 3, 4. And so what this means is there's a push up to around $1.25 or $1.55. It doesn't like it if it gets below 68 cents. It wouldn't like that. At the moment, Capital is probably a speculative buy, looking for that 99 cents to $1 area, with a stop loss below 92 cents. Let's drop down to the weeklies, see what that looks like. Again, we can see up here, it's rallying on falling volume, which is a negative. So up to here, back down to here. Rallying up to here to $1, maybe $1.03. I don't think so, but there's a bit of a chance of $1.03 before it gets knocked on the head. So that's Capital. Now, I've had a few requests in the box, and before we do that, I want to show you a couple of ones which have been coming up on the radar for, bizarrely, downtrends. And I want to research this because this is of interest. This is Sonomed. And when I did my research tonight, we all know about ResMed, sleep apnea. It seems like every one of these healthcare, Fisher-Paykel, Sonomed, Avita, they are all getting into the software snoring bandwagon. So it is a really AHZ, Avita. Yeah, thanks, Lorraine. It is really a heavily loaded one, and I think Sonomed they do the mouth guards, which sounds like a great idea. The other ones, it seems to me that they just put a reverse vacuum cleaner, and it's pretty. You just go to Godfrey's for that sort of stuff, I guess. Now we see this big breakup, and this machine doesn't know what to do with what has gone on with Sonomed, and it's certainly, when you look at it, this looks like a third wave. This looks like a fourth wave. That was a fifth. This is a fourth wave of higher degree. You notice it came back to the fourth wave of lesser degree. We go 1, 2, 1, 2, 1, 2, zoom, zoom, zoom. So probably at the moment, on all counts, it's looking for negatives with a target down to, it's a strange beast, this one. The target down to, say, $1.70 or $2, right? So SOM, we'll have a look at what it does on my sort of way. Again, Sonomed, not happy to touch it really. Volume has been getting a little bit heavy to the downside, so you might get it to $2.61 or $2.83, but I don't like it really. You notice that the overall there's negativity in the healthcare index, right? And when I see fund managers and everybody else getting really, really chirpy and happy about it, I tend to think, they can't all be right for all the time that they think they want to be. So Sonomed, $1.98 would be the zone, I think, to $2. That's the machine. thinking on the also thinking that way. Notice here we're getting a bit of a rally up on poor volume last week, and this week it's not really going on with the job. So at the moment, down to about $2.39. If it holds there, expect a rally up to $2.83, but eventually should find its way down to $2 and that sort of area. So I'm not going to go down on the dailies because we just take that time. So that was one of the ones that is a continuation to the downside. So we can see whether there's things that are continuations. Now, the next one we'll go have a squiz at. Where are we? Okay, so the next one, we're still hold fire on the questions at the moment. Sonic. And why I'm looking at these ones is because if you, like me, you think Sonic is a very strong, has been a reasonably strong stock over the while. But now we're starting to see signs that of a decent pullback. And this machine is doing a wave count that I simply don't agree with. That's not to say that it's not wrong, but you can see that it's head-butted some major targets and it's wobbling. And really the breakdown point is below $19. Let's have a look on that with the other way of doing things. Are you getting something out of this? Now, I might also add that Gold Profit Owner Group membership is by application only. So if you're thinking about becoming a Gold Profit Owner Group member, send me a request. You can go there. I've got an interview on Friday at lunchtime with a prospective PHG member, Gold member. And if you want to do an interview Friday lunchtime, a little bit before that, we can arrange that. Silver members, send me an email tonight if you're interested in that. We'll can get you organised. I interview and to see whether we're a fit. Gold members are very important to me. They form up the brains trust. We're like a organic. It's not just me. It's just the brains of other people in this group coming to me with questions about stocks and ideas. And I think it works well. It's not just me. And the silver members receive everything. I can only have a certain amount of gold members. I found that at one stage a while back, it was about 3 years ago, I was finding myself answering far too many questions and burning out a bit. And I thought, how can I get this information to everybody in the way? So I said, okay, well, we can have silver members where they take what comes from the gold section and they get all that information, member questions at the same time, a lot of things they get at the same time. So the silvers is a very good way of ensuring that I stay good at what I do without burning out. So Sonic, when I look at this chart, I see volume to the downside. So it's a negative and it's sitting on the old top. So a crack below 1920 is a worry for $18.71. So Sonic, not happy, leave it alone. On the weekly charts, we see Sonic, not happy, leave it alone, 1871, or these tops. If you wanted to buy a break back up and you thought that this market was holding its levels, you would wait till a break back up above $20.25. How are your brains going with this? This is what I do all day for people. So, and I love it. It's weird, isn't it? AHZ. Okay, let's look at. So next one. These are the ones that are of interest. And these ones are continuations to the downside, as I said at the start. Sometimes we miss what I'm saying. These are the ones that I don't like. and I'm confirming, the machine doesn't like it, and I'm confirming whether I don't like them either. Now, and for what reasons? Ansell, which is, I was surprised that it's a healthcare stock. Now, I do like this one, and the machine does like this one. It's got good continuation. It's got a fourth wave. We've got some 1-2s in here. It's probably undergoing a fourth wave, and as long as it holds above $24.20, it's good and probably best to buy on a break above $27, targeting $39. Let's drop down into this side. And we can see here, a bit of a problem, but the way it's coming back is somewhat corrective. The ultimate area would be $21.66. Okay, now, this is how Profit Owner Group works for the bronze members. Bronze members, they get attend the forecast webinars live. They get the forecast recordings of the forecast webinars. They get to attend the trading webinars and watch the training webinar recordings. So I'm going to take 3 questions for the room, and then we'll need to get going. The bronze membership is $2,497 for the year. Now, the first 3 questions that were patient. Okay, so here we go. We have JHC, which is Japara. If I remember correctly. Is that a good guess? JHC, RMD, and RHC. Now, at first instance, I can see that volume has not been that good on the upside, and it's got some problems, particularly if it gets below $2.56. So no more questions. We've got the 3, JHC, RMD, and RHC. What we can see here is Japara. You know, I don't know. What I suspect is eventually it may get as high as $3.60. At the moment, I think it's got some problems. That's just by the volume. On the weekly chart, we see a bit of a 5-wave structure here. 1, 2, 3, 4, something or other. It's a bit of a long bow to draw. We're going to do a wave count. Louise, that's all stuff you're going to learn at the seminar on the Gold Coast. Does volume traveling in different directions to uptrend equal divergence? It indicates if volume is increasing and price is increasing, it indicates strength. If volume is increasing and price is decreasing, it indicates weakness. So Japara, again, this is 5-wave structure city. So a breakdown below $2.64 is not the right thing to see. If this comes back, the first target is $2.44, but the second target and real target is $2.20. Okay. Now, you can see here, this is a corrective pattern as well. So it's not negative in the long run, it's corrective in the in the medium term, and possibly to higher to that $3.60, $3, and there's also $2.90. So let's just, yeah, $3.38. Now what I'm going to do now is I'm going to pluck out Japara from a wave count just to confirm, and I don't do this, I don't use the machine very often. I tend to use it for webinars and things, as Profit Owner Group members will attest, because I want to see the difference. It's almost like what it thinks and what I think, to see whether I'm screwed up in the head. And sometimes it's correct, sometimes I'm correct. Now, Japara is showing signs of extreme strangeness. I said that before. There is a 5-wave quality to this. Breaking back down below that 260 area is the problem. And we can see that it believes that it's still going up towards $2.90, maybe higher. So it's a tricky little puppy, that one. A, B, C. Wave 1 of C, 2 of C, 3 of C, 4 of C, 5 of C. Did a much bigger correction. So $2.20 still makes sense to me, whatever, even if it goes up, believe it or not. So Japara, if you're going to be going in there, hold on with a tight-ish stop, hoping for better things, but my feeling is that it's going to break down. Next one is, we had on the question box, we had RMD. And I'd also like to talk about John Robertson as a broker. Now, John was never born a broker. He was a floor trader, and he used to trade his own money for his own living on the floor of the Sydney Futures Exchange. He's used to executing orders, and he is the go-to person when merchant investment banks that he's worked at and other brokers that he's worked at have gotten into trouble with positions that they have not been able to get out of, or customers that have got around the wrong way, and he has gone in and executed their orders. A very good order execution person and a very good broker. He lives for his customers and he dies for them as well. So he'll go the extra mile for you as a customer. He's not. I'll tell you what he isn't. He is simply not a salesperson. So if you are looking to be sold, don't go to John Robertson. If you are looking to be served, go to John Robertson. He's not. He's a. That's why, in terms of, I always the salesmen are really nice, but I found that they're not helpful in trading. They're helpful for getting you to become a customer. John will help you to be a customer, but he will be a very very helpful and educational broker for you, because he's been there, done that as well. So let's go in, and we're looking at RMD. Now, RMD, what was I saying in the Perth seminar for RMD? I was talking about coming back down to around about the $7.90 area. So far, that was about a month ago. So far, we've seen it come down to, where are we? Have to put it in the right thing. So far, it's had a low of $7.97, which was in orb. So it was within orb of my target. It's come down to where it is. You'll notice there's a few things in there. It thinks it's a wave 4. I tend to agree. I think it's a bit of a buy with a cheeky stop loss. You might want to get a little bit more out of it, but I think it's a buy somewhere with a stop below $7, looking for higher levels. Now, when you're talking about wave, this is different. This, Martin, wave 1 and wave 2, this is the machine counting, and I never understand why it does that, so I can't justify it. I use the machine when it makes sense to me, but wave 2, sometimes you have to forgive the machine for being non-human, and it forgives me for being human as well. RMD, again, struggling to get higher. So where you would expect it to is somewhere 868 or 913 in just a push up. It's come back down into the first target. The next target, as I said, was around that 737 area. And we can see here it's not the best. So we need to see, don't get too excited about about it hitting that target at $7.97. If you have bought it off there, stop can be at $8.06 and look to revisit down at $7. So up here, if you get the rally up there, it might be okay to unload it. The volume has been big on the dailies, on the weeklies, sorry about that. On the dailies, we see a nice retracement down and up. And so further momentum to the downside. There's that target, was there at 787. That was the proper target. So we might see this as wave 1, 2, 3, 4, 5, gets to 787, rallies back up into that 868, $9.13, and then completes lower down at that $7 area or $6.98 area that we were talking about before. So thank you for the question on RMD. And we went to RMD on that one, on the wave count, didn't we? Okay, so RHC, which is Ramsay Health Care. And thanks for your questions. What we do with the Profit Hunter group is we say, please ask the questions in the time when I ask it. Otherwise, I get a bit distracted, and so it's just a little bit easier to ask them in the slots when we have the 3 questions. And when I say questions with notice, I mean questions with notice. If you're going to book in and you want to see, and you want to be guaranteed that you will see your stock answered, send me an email beforehand and I will answer it. Strangely, I only received 2 emails with those answers. So all the questions you're asking now is you could have got them in if you had have sent me a question with notice. I'll answer all of the questions with notice. Okay, so Ramsay. Monthly chart, I've been talking about $60.90 for Ramsay for about a month and a half. Now, so it's broken down. That's no surprise. That's no shock. We've got heavy volume to the downside. We see a rally up towards $64.24 or $66.15 as being a get out of jail point before another decline down to $55. I think that you should be looking to buy in on Ramsay as a nibble around that $60.90 area, just for fun, with a stop loss below $60.50, and see how it goes. It's coming into a little bit of support area, and I think it's worthwhile having a go as a low probability, high reward trade. And thanks for that comment, Judy. I didn't get to answer you that today. We're seeing fast volume on the decline today. That's no surprise either, because the market itself was no good. This was a little flag, and you noticed the other day when I talked on the transcript of the PHG trade, Profit Owner Group membership. I want to show you this because and this is, I believe it was a flag was on Monday. It may have been today, but I just want to pick this up, see what we can get in there. Sorry for the little my computer seems to be going slow. Okay, view. Okay, so where are we? I went on a rant on Joe Hockey today. If you're offended by swear words and stuff, you're probably better off not reading this. But now let's. This is the transcript for the longer term approach, which comes into being what's called the Australian Shares Report. And it's for longer term people so that they can see what's going on. covers, this is one morning's worth of analysis that I do live for members. NAB, Chinese iron ore, we covered. Materials, FMG, we've had a fantastic run in FMG, which you've seen from the emails. I told people to take some profit today up on the open, or a little bit higher up at $2.60 today. We covered XEJ, we covered Earl Search, Paladin, XGD, Gold Index, the Healthcare Index. Here we go. So what I said, the healthcare has been rallying, and I said here, well, the Australian dollar has been going down. Some say it's sensitive to the Australian dollar. The Aussie dollar went up yesterday, and the healthcare index has been rallying for 2 to 3 days, which then missed again. That would be, you'd say that would be a correction. I also came back down to my slapping breakdown point, came back up to, this is transcripted and edited, 19,000 was the area that I thought it should get slopped at again, which it did. Not looking all that flash, heading down to 17,664. This is before the market opens that you get this information as a Profit Hunter Group member. So tonight, my friend, look at Health Stokes. So I told you they were already not so flash. Ramsey 59.47. Let's look at the healthcare index itself just to see what it did. You've seen that before. So they're the charts that I do first thing in the morning. You can see here, there's that rally that we saw up on this day here. See that rally? And looking for 17,664. Okay, so that's moving right along. We have completed the questions for the room. They're not that flash. We talked about the Australian Shares Report, which is more for long-term investors and self-managed super funds owners. If you're interested in that, that's quite good. Now, CSL generally has a big sway over the healthcare index, and this is the conclusions. We've seen very few healthy healthcare stocks, and that was the purpose of today, to show you that in a falling market, healthcare stocks were previously the province of the profit protectors. What they would do is they would buy and healthcare because they were getting saved by a falling Aussie dollar. They were also getting saved by the fact that everybody else was jumping in there. So fund managers now cannot buy more healthcare stocks in a falling market because, as a defense, because they're overweight in them. So the healthcare stocks, you might have a try in there, and you might give it a go, but from time to time you're going to get a little bit disappointed. Okay, so these are my 3 steps. We talked about time, trend, and pattern. And you can mix them around wherever you go, but I think it's better to start at time and say, hey, this is a time where it's important, and then go, I keep an open mind, and then go, maybe it's ready to go, and it suits the pattern. You look at the volume, and then you say, what's the trend? And you go, the trend is up, the trend is down. If the market's coming into a time where it's bottoming, you don't fight a downtrend, but you look for reversals when it changes trend. So now tonight, for those people who wish to become silver members, send me an email. That was the discounted price that you saw for $3,997 annually for silver membership, and that's normally $5,000 for the year. So CSL tends to top in April and drop into end of November before regrouping. We also see CSL has a great trend consistency, so it does like to low in mid-May and then rally a bit So hold off a little bit. Your best time, I think, for the healthcare index is to be a better buy after early August for a run into January. And at the moment, I'd be holding off. The banks, there are other things like that. Okay, I thank you all for coming along. And if you want to hang around a little bit, that special on the silver membership is valid until Friday. If you wish to take me up on that offer of saving $1,000 off your membership or $1,003 off your membership, that's valid till Friday afternoon. If you wish to apply to become a gold member, email me, ask for an application and an interview, and we will then organise whether that's good. I'll interview you and I'll see whether we've got a good fit and whether it would work for you and it would work for us as a group and it would work for me, you becoming a gold member. If I don't accept you as a gold member, no skin, it's no reflection of you. It probably means that I'd like you to get a little bit more experience in the markets before becoming a gold member. Watch what I do so that you understand how I do things. And when you're ready, you can become a gold member. That's no problem. Yeah, give me an email. And thank you all very much for coming along. Tony, give me an email on that, please. And thanks, Tony. Thanks, Lorraine. Good to see you on, Lorraine. Thanks, Pierre de Resistance. Thanks, Stephen. Good to see you back on. And good night, everybody. Thanks, Adrian. Thanks, Peter. And actually, I'll be on Sky tomorrow night. They've asked me on tomorrow night, so call in. Thanks, Erica. Good to see you on. Been missing you in the mornings. I hope you've been doing the recordings or you've just been lying, sleeping in. I was wondering if you're on holidays. Adrian, you might not say that tonight after Janet Yellen speaks. And no, Louise, that's good that you did the webinar, so you'll actually be plugged in a bit for what I'm about when you get to the seminar on next Thursday week. If you are thinking of coming to the seminar, you go to profithunters.com.au. This is the Train the Chartist seminar, and you can see a little bit about that. It's at Surfers Paradise on May 14th at the Crown Plaza, Surfers Paradise. It'll be a full day. You'll even get lunch. The cost is extremely reasonable, $297 at this point. I'm under instructions to raise the price. I haven't thought about that yet, but yeah, generally I used to pay $1,000 a day for the education I got, if not more, from different other traders and chartists. That this is reasonable at $247, including lunch and morning and afternoon tea. And yeah, I look forward to seeing. If you want to go there, have a look. Go to profithunters.com.au and have a squiz. Thanks, everybody. Have a great night and day and good sleeping. Cheers, everybody. Bye-bye. The recording will probably be up in about half an hour or so. I think that's probably when I'll be up there. Cheers. Have a good one. Thanks, Adrian. Good to see you on there too. In terms of those indicators, there are a couple of different ways of doing that. Just email me, Maria, and I'll show you where they are. Cheers. Okay, bye.